Hi everyone, welcome to the show. This is the podcast show for female entrepreneurs in business, and I'm your host, Sian Kyra, founder of the Female Entrepreneur Collective. I'm a certified business and mindset coach, and I went from being in my overdraft for over a decade to generating over £1 million in online sales just over a few short years. So this is the podcast for you if you want to learn more about scaling your business, starting your business, you want to learn more about mindset and healing in business and spirituality as well. We'll be here every week delivering those conversations for you. And I just want to say, welcome to the show. If you found value in this episode, then please do subscribe to our YouTube channel. We want to have incredible conversations every week with like-minded women in business and CEOs, and your support honestly means the world to me. So the more you can share this and subscribe to our channel, the more impact we can have for all of us together, and together we rise. Raji, welcome to the show. I'm so excited to have you here.
Thank you. Thank you very much for having me.
So for those of you that don't know who Raji is, Raji, can you just give us a small little introduction on who you are?
Yes, absolutely. So for those of you who don't know, I am Raji Kaippallil. I am a qualified financial advisor, and I have been in the UK for nearly 8+ years now. So I actually moved from Dubai and I've been here for about 8 years. And what I do now is talk about money. That's all what I do every day. I love talking about money. I love talking about managing your own money and investing in the stock market, which is something not many are really confident. And my mission has been to be really make sure or give people, everybody, everyone the confidence to be able to start investing for their future.
I'm so excited to have this conversation, especially for female entrepreneurs, because I feel like women and money is a very, very hot topic. And I feel like we have so many feelings around money, especially as like female entrepreneurs, people who are starting their business, or just in general. And I think we're living in such interesting times at the moment with everything happening globally, which is I think exciting, and it can be nerve-wracking for people. Yeah. So I'm just really excited to have this conversation, talk about money beliefs, investing, what you can do with your money as a female entrepreneur, because I think there's so much kind of stigma attached to investing, so much fear as well.
Exactly. Yeah.
And I'm just really excited for, the listeners and the viewers to really break this down for them.
Love it. My favorite topic. So I'm all here for it.
I can't wait to prick your brains, because I had some questions for myself as well. So let's get started then. So what were your money beliefs as you were growing up in terms of, money and money mindset?
I think a lot of my money beliefs and even my relationship with money really came from just how my family raised me. And I think that's been one of the reasons why I believe I have a very good relationship with money. So, and right now when I look back at it, kind of makes sense, because when research says that your money beliefs are kind of set or kind of instilled in you by the age of like seven, as early as 7. And that makes so much sense now that I look back. And, if you look at my family, my parents, I think one of the things that they have always told me from a very young age is to make sure that you have multiple sources of income. It's important to have multiple sources of income. It's important to save and invest into assets. And we've always had that conversation like on the dinner table and otherwise. And I have a brother as well, but, growing up, my parents, and especially my dad, had that conversation with both of us. And obviously back then it was just the norm for me. But when I really stepped out in the world, that's when I realized, one, not every family, has a kind of conversation around money. 2, especially if you are a girl or a woman, again, it's not a conversation that you've probably have had with your family or with your father or with your mother, growing up. And so I'm just so grateful that, I'm really grateful to them for having that conversation. I really think it's some of those beliefs, some of those things that they have really taught me. And most importantly, they've kind of walked the talk as well. So they've showed what it is like to be making sure we save and invest for our future, and making sure how that can have a positive impact in the long run. So them just walking the talk kind of just really kind of cemented, in my world that yes, what they say makes real sense. And so it was just too obvious for me to, carry on and do better if I can.
I love that so much. And I think role modeling is so important when it comes to money. And I think some people might be listening and they might be thinking, oh, I don't know like what my money beliefs are or what my money mindset is. But really, you just have to delve into your childhood and really think about what were you taught about money.
Yeah.
So for example, like with you, it was a very empowering conversation around money. For me, I was growing up like on the roughest streets of my hometown. My parents were like factory workers, and we never really had conversations around money. But I think the conversations actually we did have were very negative. Like I remember so much negativity around money, and like my dad losing his job, and then like, him going on the dole, so to speak, as we say in the UK here. But I think it's really important also to say that you can change your money beliefs.
Yeah, exactly.
From someone who like, and this is just like, it's going to be a humble brag. It's all good. For someone who like didn't have much money, I've, widely shared that I was in my overdraft for over a decade in like my 20s, to then investing in multiple properties, and now really looking at how we can take the money out of the business and continue to invest. That's so important.
Yeah.
Because again, I see so many business owners, especially in the kind of non-Asian space, before like say 2021, 2022, before like the kind of crash happened, so to speak, they never invested their money. They were just building their company, which I think is amazing. But I think you have to take that. That's something I've been so big on over the last, since I started my business, investing it into property.
Yeah.
Stocks and shares, not so much, which we'll get into today, but that money has now grown. And, that has been so important, to weather like economic storms.
Exactly.
And just have that reoccurring income like coming in every month, and just not worrying, because you never know what's going to happen with your business. You never know, like now, like in the UK, there's a cost of living crisis. Like luckily our business is still doing really well, but there's people out there whose businesses are struggling. There's been redundancies. So I'm so on board with having these multiple sources of income, but also that you can change your money beliefs.
Yeah, absolutely. I mean, there are so many beliefs that I've probably inherited from them, which I had to kind of rework on. And so this is not to say everything was empowering. So even now I have conversations with, like with my parents, where they might not necessarily agree with what with the way I do with, certain things with money.
Yeah.
But I'm like, that's how everyone is, right? And the thing to keep in mind is that, when you reach your adulthood, and especially now, there's so much information there's out there. If you're not still changing, if you've had a negative relationship with money, and if you've had a negative mindset with money, and you already understand that, and you're not willing to change, I don't think you can really complain or on your parents or on any external factors, because now you really have the resources if you wanted to make that change. So yeah, it's definitely me taking that step-by-step approach and building it over time.
I love that so much. You really can't be a victim in this situation. So let's talk about your investing journey.
Okay.
Because this has been I was reading your bio, and it's so exciting what you've achieved. So how did it all start for you?
So, this just comes back to the money mindset belief as well. So when I got my first job, like I said, I think saving did come quite naturally to me, because I think to a certain extent, if you're from the brown house, you're told from a very young age, save. So I'm not going to lie, I just knew that from day one that, okay, it's important to save. And at that point as well, I had a goal, because I wanted to do my master's. And again, just goes back to what my parents did tell me, that we really can't afford to send you to, to the UK and on international student fee and all that. But what you can, do is maybe look out for scholarships. So, it's just another way of just them saying like, okay, you don't have to limit your dreams, but look at other ways. So in a way that was good, because then I knew the day I got my first job, okay, I need to save up because, getting myself a master's degree was important to me. And so, yeah, I had a goal in mind. I started saving. But then when I started saving, I was like, yeah, but when you save it in the bank, it's like, what, 1%, 2%? And now we probably have, just because of how the situation is, maybe 4% maximum. And I was like, I mean, if I'm going to save like this, I'm never going to get anywhere. So I started to look at, different ways in which I can actually look at ways to kind of like multiply my money, like make more money. And that's when different people, I started to ask different people, and everyone was like, oh, don't be so greedy. You should be quite satisfied with what you have. You've got a good job, which means you can save. And, you wanting to make more money. I was told multiple times that I was just being greedy. And to be fair, I kind of internalized that for a very long time. I was like, maybe I am actually being, greedy to make more money. But I was let up, and I stopped. Like, I still have to find a way to actually make more money. And that's when I started looking at different asset classes and how can I make sure, I can kind of grow my money, on the side. Now, at that point, obviously, property was not something I could actually, put my entire money into, just because I had another goal of pursuing my master's. And I started looking into the stock market. And I cannot tell you that, like, most people told me, do not invest in the stock market. It's gambling.
Yeah.
That's what I've been told. It's too big of a risk. So don't invest, or, it's just gambling your money.
Yeah.
And the truth is, I did not tell anyone, at least for a good 2 to 3 years, that I was actually putting some money into the stock market, and then, started to but I just started dipping, my toes, because I had by then kind of internalized all these fears, because I was like, oh, maybe I'm being greedy, or that this is actually a gamble, this is some kind of, I don't know, something that's not right. And I was really worried that if I told someone that I was investing my money in the stock market, and if what they said became true, then they would be just proved right.
Yeah.
And I don't want to be proven wrong.
And you're like, I might just get some evil eye or something.
So yeah, for a very long time, I didn't tell. But, at that point, I think maybe it's also, the time when you're too young and your risk appetite is a little bit higher. But at that point, whatever I could really keep aside, I just kept aside and started investing, making those small steps. But what that really helped me was to actually want to learn more about the stock market, because I started putting my money in, because I had all these fears, around me, and everybody telling me, oh my, don't do that. That's gambling. It's not the right way to go. You're being greedy. I was like, I need to learn more about this. That, I definitely need to learn more about this. And that's when I really started reading a lot of books and, like online resources. At that point, this was about 9 years ago.
Yeah,
so,
it's different.
It's very different. So it was basically like resources like Investopedia that I could just read. But it's overwhelming. Like, each word, I'm like, okay, what does this jargon mean? I had to then go and Google that. So it was a long journey, but then that's really what got me started. And over time, I then realized, actually, it's not really like what people tell.
Say.
And then that's when I realized anyone who does not invest in the stock market are the ones who say that it's a gamble, that you're being greedy. But anyone who's been investing consistently, they would never say that. And also, stock market has this reputation that, oh, you can go and make 10x your money. You put in, £10 today, you will get like £100 tomorrow. And that is where most people go wrong, because they just thinking, I can make quick money from the stock market. I can become rich instantly if I buy this share today at this price, and tomorrow if I sell it, that kind of, they tried and predict the stock market. But what I realized was it was really about staying in that game for the longer term. It's not really about you buying something today and selling it off tomorrow, but it's very similar to property, right? Like
it's a long game.
It's a long game. It's exactly that. But I think most people don't see stock market as a long game. They just see it as something where they can make quick money and, just spend that on something else.
Yeah, I love that. And I think, especially with property, like I bought my first property probably 12 years ago now. Okay. So I was in my 20s when I bought my first few properties. So I was really good at that time. I was like, I'm going to just put my money into property because that's the Asian thing to do. And it's grown. It's been incredible. And now it's the rents have obviously gone up.
Yeah.
And obviously in the UK, the housing crisis is wild. Yeah. And that's obviously going to be a trend that continues over the next decades, I think. So in terms of the UK and internationally, is there a difference between kind of international stock market or the UK? Is there differences, or is it that if you learn the principles you can apply it globally, if that makes sense?
Yeah, I mean, the principles are the same. Irrespective of where you are, whether you're, living in the UK or you're abroad, wherever you are, the basic principles are the same. What then, when it comes to differences, it would probably be things like what platforms to use. So if you're a UK resident, the platforms that you can access and then invest through to, buy stocks or funds will be different for someone else in another country. So it's only those things, but the underlying principles and the basics are the same across anywhere.
Yeah.
And the beauty of technology is that today we can actually invest not just in the UK stock market, but across the world. You can invest in the US stock market. If you want to invest in the Indian stock market, you can do that, or any other stock market, you name it, you can do that just because, thanks to technology.
Yeah, I love that. And say, for example, you're a female entrepreneur now.
Yeah.
And say you've got, I don't know, £10,000, £5,000. In the UK, would you recommend people starting in the UK, or do you think that it's better to kind of reach out to those global stock markets?
So I would say take a step-by-step approach. So one of the things would be, before you even start investing, ask yourself, do you have some liquid cash with you?
Yeah.
Because like I said, investing, whether that's property, whether that's, stock market or any other asset class, most of them are long-term game. You're looking at 10 plus years, right? So when a difficult situation comes in, or, something like right now where we are, and your business is struggling, and if you really want to take money, out, you to pay your bills or things like that, you really can't be going in and putting your hand into one of these asset classes, or go and sell your shares. This is definitely not the right time to be selling them.
Yeah.
So you still want to be holding them. So if you want to be doing that, you need to make sure before you even start investing, you have a liquid cash, something called an emergency fund.
Yeah.
And as the name suggests, it's just there for emergency. So if an emergency arises, that's there for you to just go and, take that money and spend it on. When I say spend it on your emergencies, right? So that's important. And once you have that, then the next step is for you to actually start making sure now your money, the rest of your money does some work and make more money for you. So that's where if you're investing in the stock market, my suggestion would be to actually be starting with a global exposure rather than just one particular country. So there are funds, something called index funds, where basically if you invest into an index fund, a global index fund, you get exposure to companies in the US stock market, UK stock market, across multiple countries, across developed countries and developing countries. So you're not technically just dependent on one country and its economy and its then associated stock market performance. So that way, for instance, you put in £100, that £100 would be split across companies like Tesla, Google in the US. And you'll also have some exposure to some of the FTSE 100 companies, the top companies in the UK as well. So that way, that kind of risk that you take, when you start off, it's not that high.
It's low risk.
Yeah. So that's where I would, if you are someone who's starting out, that's where you want to start off with. because then and then build it up slowly. What most people do is they go the other way around. They start off with high risk things like crypto and I don't know, startups and all of that. And then they were like, oh, but if you ask them, do you invest into like something as simple as an index fund? Oh, no, I don't.
Yeah.
So this is where you want to start off with. So it's more like, I would say, like building the foundation where you're building one step at a time. And then technically it means is you're just building a stronger base.
Yeah.
So when times, becomes difficult, which it will, right? And I think this is the perfect time to, kind of just show it, which proves that, right? There will be times when it's difficult. We're still able to hold on to these things. We're not forced to sell these shares or funds, and we can hold on and then we can move on.
I really loved what you said there about like not being too risky, because the thing that came to mind is, the Wolf of Wall Street, when they do those shares with, I can't remember the company name, the shoe company, isn't it? And it's just that film just makes me laugh, because I think that's all the bad misconceptions.
Exactly. I think that's where, blame it on media, on films as well. I think that's what people think. The stock market is like, you have to be constantly involved, like keep making sure you're always glued to your screen and checking what the price is. That is an element of the stock market, and that's called trading.
Yes.
Yeah. So where you're trying to make money within a very short time. Now, of course, you can trade and you can be a good trader, but it's not easy.
It's time consuming.
Exactly. Mm-hmm. What most people think is that I can make really big amount of money without doing, putting in the work. That's not how it is. It's no easy money. You have to be willing to, do your research and be constantly, making sure you're updated and then accordingly take decisions. And it's high risk as well, because as much as you can make money, you can lose money as well. So that's definitely not the area that you want to start off with.
Yeah.
So you want to start off with something which is more long-term, which is a little bit less riskier. And I'm not saying this is not risky at all, but there is some element of risk always. But you start off with something less risky, and then after that you start slowly building it up. And then of course that's where questions comes, like what are your financial goals, like how long are you planning to invest it for, why are you even investing, why do you need this money for, etc. And all of that comes in.
Yeah, I love that so much. So thank you so much for sharing that. My business, the Female Entrepreneur Collective, is so much more than a business. It's a community of like-minded women just like you. And when I started my business all those years ago, I really struggled unnecessarily in the beginning stages of my business. I struggled with my mindset, I struggled with content and just self-belief. That's when I decided to certify as a business and mindset coach. And now we offer the most incredible mastermind for ambitious female entrepreneurs just like you. This is the perfect blend of mindset meets marketing meets content to help you step into your potential and reach your next level in business. So doors are actually open to my Rebirth Mastermind right now, and we have already got incredible women enrolled in it just like you. We would absolutely love to have you. You can find more information in the show notes, or you can just drop me a DM on Instagram. I'm on Asian_female_entrepreneur. We'd love to support you in your business and mindset journey, and let's rise together. So in terms of like, if you do want to get started, is it like we would work with someone like you, obviously who's really qualified in this area? Is it that you would go to a bank? Is it that you could like look at because I know like some banks do have their own kind of process, don't they? I've seen that on their website. Yeah. So what would you say is like the best way to do it?
In my view, the best way to do it is to kind of, start, DIY it. And the reason why I say that today, again, just goes back to what I was saying, technology, right? It's just made it so much easier and accessible, for us to actually invest. So companies like Vanguard or Trading 212. These are like free trade. These are great platforms where you can just sit at home and open an account like within minutes, and then you can set up, start investing. And especially if you're someone who's starting off with very minimal amount, or I'm saying like £50, £100 a month, then you do not necessarily need, a bank or a financial advisor to actually be kind of telling you or taking a percentage of your money to actually manage that for you. But if you want it, what I would say is it's important that you do some research, like take some time out to learn, right? And I'm not saying that you should not work with a financial advisor. It is important that you work with a financial advisor. But in that case, what I always suggest is make sure you work with a fee-only financial advisor. So what that means is you basically, you're just giving them money for their time. So they charge you for their time, and they're not taking a percentage of your portfolio, because that over time, that can
compounds.
Exactly. And that can be a big number over time. So what you want to do is find a fee-only financial advisor. And most of the thing is, most of these advisors, when they're fee-only financial advisor, it means they're not affiliated to any particular products or anything. So they actually keep your interests in mind. And then they accordingly suggest, because they don't have to kind of sell a product that, kind of push it down your throat, because they get commission from it. So that's an important thing to keep in mind. Make sure you work with a fee-only financial advisor and take advice from them. And of course, you have to pay for them, so that's where most people are like, oh, I don't want to pay for it. But if you're going to another financial advisor who's commission-based, just bear in mind that you might not be paying for it, but it's just that you're probably given a product that's not the best fit for you.
Yeah, I love that so much. Thank you so much for sharing that. And in terms of, say, Vanguard, right? Say, for example, I've never been onto Vanguard. And after this conversation, I'm definitely going to be investing. Say, for example, I go onto Vanguard and like, on there, would there just be like a list of companies I know this sounds like in really layman terms, but would there just be like a list of companies that you could invest in, and then you would just do your research? Like, what kind of things should we be looking out for, I guess?
Yeah. So there are two ways to go about it. You can either buy like, different companies, right? You can either go and buy one share of Google and, one share of Tesla, or, so you can buy those individual companies. You can either do that, or what you can do is you can actually invest into a fund. Now, a fund is basically, think of it like a basket of multiple companies. So that, that basket has, Google, Tesla, name it, Microsoft, all these big companies across the world, all of them are in that basket. And then you buy a portion of that basket. So what then happens is when you buy a unit or a piece of that basket, you see you're not having exposure to just one company. That £100 that you invested would be split across multiple companies. So these are two different ways you can go about it. So the way I always suggest is, if you are someone who's investing for the very long time, right? I always suggest to go for a fund. And the reason is, how do you know 10 years of 20 years down the line?
You just don't.
Which company is going to be doing well? Or how do you know if it's going to go up or down?
Yeah.
It might look great now, but what about 10 or 15 years down the line? Right? The biggest example is, we all know about Nokia, right?
Like,
it was, everybody.
BlackBerry.
Exactly. We all wanted, them at some point, but then came iPhone and Samsung, and where are they? But, like years ago, someone said, this is how it would be. Would be like, oh, no way. Like,
I know.
Exactly.
It's madness.
Exactly. So, and there's just so many other such companies, right?
Yeah.
Who's done well and who's gone the other way around as well. So that is why you don't want to be putting all, for example, your entire retirement and, fund into just one company. This is called diversification. Because then that way you're having exposure to multiple companies. And even if one company, closes down or does not perform that well, you're not that impacted. The impact is minimal, basically.
You're basically diversifying your risk.
Exactly.
Yeah.
So that is where you want to start off with. So if you're very much in the early stages, and then once you have set that up, now you're like, oh, you know what? Now I have a little bit more money, which I can kind of, take that higher risk and be like, you know what? I actually want to buy some shares of Nvidia or, I don't know, like Tesla or whatever. It's okay because you've already kind of set that foundation. You've got a strong foundation. Now you're taking a little bit more higher risk, but then it's not all your money in one particular share.
And if you were to hedge your bets on one company right now, like who would it be?
Ooh,
I know it's a really difficult question.
Yeah, I don't think I would put that on one company, but I would say I very much believe in AI.
I'm just about to say the same thing. I was like tech and AI.
Yeah, exactly. That's scenario. I know different people have different, I don't know, like opinions about it, but I am very much a big, believer of AI. So companies that are in that space is where what I would put. And again, I wouldn't put all my money into just one company. Never do that. So yeah. So, even companies right now, like in the green energy space, those are great as well. That's where I believe.
Yeah.
And some of these comes down to your own beliefs as well. Like I said, some people are like, there's no way AI is just a hype. And, it's, but some people do believe that. And some people are like, oh, no, that's kind of the future. So I think a little bit of that comes down to your personal beliefs as well. The way you see the world and perceive the world.
I think that's so interesting because I think, you've got to think about long term and like the way the world is going and have those beliefs, in terms of like who you want to invest in. And that your kind of gut feeling, intuition will be, because at the moment, probably for me, I probably wouldn't invest in Google just because I think AI is ChatGPT is kind of the new Google. Can't remember the last time I went on to Google actually, unless I was finding an address or like a restaurant, but I'm just literally ChatGPTing everything because it's my like little assistant now, and like my husband, he was using another one. Which one was it? Not Claude. It was like a different, it's literally gone, but they were literally having a conversation. Like we were talking about, because I'm a little bit we were talking about human design, and it was like, Darvinda, what month were you born? And it was literally talking. And then it was like, my husband was teaching it to say like, because my mother-in-law was coming in like 5 minutes.
Okay.
And he was teaching it to say like, oh, say this when my mum arrives. Her name is Dasbit. And I was like, oh my God, this is literally crazy. It's just literally crazy. I'll have to, the name will come to me in a second, but yeah. So in terms of, because I know this is probably, this is a big question as well, and something I've always wondered, because historically I've always been very pro-property, and I do like a good little saving account. I know it's only 4% at the moment, but I think for someone like me who's been through like a lot of money trauma, it keeps me like grounded and secure and safe, and it's in line with like my money beliefs, I think.
Yeah.
Do you think it's better to invest in property or like stocks and shares? Like what's your kind of thoughts on that?
Oh, there's no one or the other. And I think that's what we all have to understand. So I always give this example, like when you're an entrepreneur, if you've got a team, right? Think of it, you have a team, one who's an accountant, somebody who's an engineer, somebody who is your personal assistant. You wouldn't expect your engineer colleague to do the work of an accountant, or you wouldn't expect your accountant to do the work of your PA. So basically, each one of them in your team, they have a different role, and they just have to do well in that particular role. So that's exactly the way I want you to think of your money as well.
Yeah.
So think of it like with your savings account, I'm not saying that does not have a role at all. It has its own job, which is for instance, just coming back to security. If you need money instantly, if you want to be able to access money in an emergency or something, where you're thinking, I actually want to buy a car or put a deposit for a house in the next 1 year. You want that money readily, accessible, right? So that is when a savings account is the best place to go into. And then there are other various asset classes, right? They all have different
roles.
Exactly, roles. So, it's never really like one or the other. So, I mean, like I said, I started with stock market because for me, it was the best way of like entrance into kind of getting that exposure to, one of the asset class. And now I really want to invest into the real estate because I'm like, I want to diversify. I don't want to put all my money into just one kind of asset class. Gold is another asset class, right? So they all are there, and we want to be able to have that like exposure to each one of them. Look at gold's price right now. The world is just going crazy right now, and the gold prices are shooting up. Right. And that's something we've always seen. Like if we look in the past data as well, we always see that every time when things are uncertain, when there's so much uncertainty and fear in the world, in the economy of countries and, just altogether around the world, it's assets like gold, which are quite considered like kind of stable assets, they tend to shoot up. So which is where we want to be able to have that exposure to, each one of them. So that way if the stock market crashes, it's not like I'm going to lose all my money. Like the other day, 2 to 3 weeks ago, when with the tariffs coming in, I saw on like X, people were like, oh my God, Trump's, basically destroyed my retirement account and all of that. And I was like, you can't really blame Trump for that, because if you put all your money into the stock market for your retirement, you were definitely not diversifying. And this is exactly why you want to make sure you have exposure to something like, the stock market, but at the same time also have exposure to other assets which are not correlated to the performance of the stock market.
Yeah, I love that so much. Like how you shared, like it's like I almost see it as like pots, like different pots. Yeah. And I think that's so interesting also when it comes to like property as well, because like all my properties now are spread across different cities.
Yeah, that's again that's diversifying within the property. Exactly. There you go. Yeah.
And it's almost like also like making your money work for you. So like even like with a business as well, I think it's really important to this has just always been my belief, and I've believed this for such a long time. And I've seen people like my peers, my coaches who are, 7-figure entrepreneurs, big like entrepreneurs. And I remember like before, say 2020, like I remember everyone had like a massive team and everyone was like investing, I don't know, like £50,000 into like a mastermind. I remember just like people were just spending crazy like around COVID and pre-COVID.
Yeah.
Even in COVID, like we know that everyone was doing really well. And I remember I said to my coach, I loved her to bits, but that year I'd literally smashed my like savings target. And she was like, are you not going to like reinvest that back into the business? And I was like, no, I'm going to put that into like, because we bought a house in Oxford. And I said, I'm going to put because I knew we were getting like a good deal with our house, but I knew that our money would grow in that house.
Yeah.
And I was like, no, like I'm going to put it into property. And this was like, 3-4 years ago now. And then I've seen that trend with female entrepreneurs who are doing really well, where they're not like taking their money. I think that's such a thing that we don't talk about enough.
Yeah.
It's like, where's the money being pulled out and where's it being put in?
Yeah.
And I think
we need, it's important to have that balance, right? It's important to reinvest into your business.
100%.
But at the same time, we want to kind of be thinking long term and be like, kind of have something for ourselves as well, in case. Like the way I see it is, yes, my business is another asset class.
Yeah, that's what I see it as.
That's the way I see it. Like it is another asset. So I'm definitely, reinvesting my money, but I'm not going to put all my money into my business, right? Just how have you just said before, what if tomorrow it does not exist anymore? I still want to be, I don't want to be where I'm just back to square one, where I've built everything, put all my money into it, and now I've just lost it all.
Yeah.
Right. So that's why the way I always see it is like, yeah, that's another asset class. Like right now I'm working on a startup, building like a fintech. But that's another asset that I'm working on. But I'm not going to put all my money into it, right? I'm going to make sure I still diversify that across having investments. And like I said, I'm getting into property as well. I've got one and I really want to have that exposure across the world as well. So, be able to do that and also invest into my business.
Yeah, I think that's so important. I think, yeah, you're right. There is a time and place where you do have to invest in your business.
Exactly.
I really believe in coaching and mentoring. I do believe in like having a team.
Yeah.
But at the end of the day, just being really mindful about your finances.
Yeah.
So in terms, I've got some really interesting questions actually. So
I love it. I love your questions.
So in terms of, gosh, there's so many I want to cover here. So first of all, let's just talk about this keeping up with the Joneses attitude.
Oh, yeah.
Because I went through a stage where in my 20s, as everyone knows, I wasn't very good with my money. Then I went through a stage where I was like investing money in my business, but then like really like hell bent on saving elsewhere.
Mm-hmm.
So I remember like I would, I lived in Canada like around 2017, 2018. And like it sounds really crazy, but like to the airport, I would get like a coach. I was like, I'm not getting a train. I'm not getting a taxi. And obviously in hindsight, I probably just could have got it. But what I found in that kind of period of my time, I found I was manifesting money a lot because I was taking care of my money. Like now I've become a little bit lax. Like today I have already had like 2 coffees and I'm like, oh my God, I spent like £10 on coffee, right? But there is this attitude, I think, is being fueled by social media, especially if people are in their 20s or early 30s listening to this, like keeping up with the Joneses. Like I see a lot of influencers and business owners, and I work with influencers and they are doing really well. And, we've had conversations around this, but they're like, very obsessed with like buying the newest handbag. So showing, especially the younger generation.
Yeah.
So like, what are your kind of thoughts on that? And how should we like be prioritizing our finances as women, I guess, and female entrepreneurs?
Firstly, I really feel you because I kind of feel like because I am, again, like have like a public page, Finance with Raji on Instagram. And sometimes, sometimes I'm like, oh, will people judge me for re-wearing the same clothes? Or because at some point, I'm also considered to a certain extent like a financial influencer.
Yeah.
And so there's why am I feeling that? That's probably because of what I see on social media as well, right? So that's somewhere I talk about all this. As I'm constantly asking myself as to, should I show up in a way that is in line with what the world expects me to do? Or should I be showing up in a way where the way I want to show up? And it's always a constant battle, right? It's always a constant battle. And the way I always ask is what's really important to me. So something I always say is, I love traveling.
Same.
I've just come back from Norway yesterday. So I love traveling. So I will definitely spend my money when it comes to travel. But I would not spend my money on getting a designer bag. I'll be like, wow, I might as well spend that money on, traveling. So firstly, the most important thing to ask is what's really important to you? And if something is important to you, ask again, is that important to you because you're trying to keep up with people around you, or is it because it truly fuels your happiness? Is it for yourself? And this is something I'm always asking. Like even when I see a good outfit, I'm like, why do I want that? Like, is it because I just want to just wear new outfits every day and make it look like, oh, I'm actually, I don't know, like spending money and, I have money? Or is it because I really want it? So it's always a question I keep asking. So one first thing is to really ask, what's important to you? So it's never about, I always say it's with money, it's always that balance, right? It's always learning. Again, just goes back to, my dad always says, it's like money is like a bird. If you hold it too tight, it will die. And if you hold it too loose, it'll fly away. So it's really learning that balance. And I always, keep that in mind. I'm like, so with that balance, what is important to me when it comes to spending my money. Where do I want to spend my money that actually makes me happy? Not trying to keep up with someone else or anything, but what makes me happy. And I think that's really very, very important. And when it comes to personal finance, I always say, if you're starting out, aim for at least 20% of your income to be saved. / invested. 20%. If you are able to do that 20%, and then of course you've got all of the expenses, right? You to pay your rent, a mortgage, and all of that. After all of that, like save 20%, then you've got the remaining 80%. Of course, out of that 80%, you still have all of the expenses to be met. But then what's left for you, if you've got money left after that, you can spend it because you've already saved, right? You don't have to feel guilty about spending that money anymore. Yeah. So that's the way I see it. But if you are someone who's spending all your money, not saving at all, then it's definitely a problem. You're definitely trying to keep up with someone around you. And whether you like it or not, sometimes I have to be, with my clients, I have to be that harsh friend who has to tell you the truth. I'm like, I hate to break it to you and be that person. But this is the truth.
You've got a problem.
Yes, you have got a problem.
And I think that, that's so empowering as well, because I think that, some of us haven't learned, for me, I never knew about saving in my 20s. Like, just didn't. I did have a little bit of savings. And obviously I bought my properties, which was great. But, that I had a really bad relationship with money. And it was only when I started self-educating myself and started thinking long-term, like I was like, I need to actually do something. I need to save now for properties. And now, like, I'm in my 30s, I really thank my 20-year-old self. But you can change as well.
Exactly.
And I think what you said, Raji, was such a breakthrough moment for me there, because you said about your dad saying, if you grab onto it too much, you'll lose it. And it's the same if you are too loose with it.
Yeah.
And I've seen that so much in like my extended family, like, people that have got a lot of money, that are like millionaires. I had very good role models around me when I was growing up. Like a lot of my family, it's so funny because we called ourselves like the kind of poorer side of the family, so to speak, but like not without, I'm not degrading anyone, but my other family members were really, they are rich. And some of them I've seen like really freely spend their money on what they want, but they'll like save and invest. But others hold on so tightly, so tight in the long run, it ends up costing them. They get bad luck, or they get like a big financial bill, or something happens in the family. And that's so important when it comes to money, because it is like a relationship. If it's like, say, your girlfriend or boyfriend and you're just grabbing onto it constantly and not letting it go, it's not going to be good. So
they will eventually leave you at some point. So exactly, which is why I say it's all about that balance, right? And then I think that saying, which my dad says, like his father taught him, it's just always stuck with me, because I'm always asking, right, am I being too tight, or am I being too careless about it? Like I'm always asking that question. And and I, like I just said before, it's important to enjoy your money as well. It's not just about saving and spending and all of that. So it's about having that balance. So if you can split your money in such a way that where you are saving a percentage, at least 20%, spend the rest of it guilt-free. It's for you to spend. Simple.
Yeah. And I think we also go through seasons as well, isn't it? Like I was in a season last year where I was like, save, invest, save, invest. This year I'm a bit more, when it comes to business, like, investing in this podcast, investing in like a coach, like you do also go through seasons as well, because I think that's also really important for like long-term growth in a way, because you can't just be stuck in a season where you're just constantly, breaking your back and just saving every penny, because that's not healthy either.
Yeah, exactly.
So Raji, you are of course a financial influencer. I love how you phrased that earlier. And it's incredible because you came to my event, I think it was like maybe not last year, the year before.
Yeah, I think so, yeah.
And you're on about 8,000 followers. And I loved your content back then as well. And I actually came into mind when I was thinking I want to bring someone on to talk about finance. Then I went onto your profile and I saw that it's like, is it like 90,000 followers on Instagram?
It's it's been on my vision board for such a long time to hit 100K. So I can't believe that I'm nearly like 93 now, and I'm very close to it. So it's definitely a big milestone that I'm hoping to get to very soon.
I love that so much. And I know people are like, but it's not about the numbers and the money.
Yeah.
But I do think it's such an achievement to grow. You're growing a community, you're financially empowering people, which I think is so needed. So in terms of the audience, like what kind of tips would you give? Because I think sometimes like women in their 30s and 40s just are like, oh, the algorithm hates me. My content's not being seen. I don't know how to do reels. I'm not very good on video. I don't know what to do. Like, how did you like navigate that? And how did you actually like crack the viral code?
So I'll give a little bit of a backstory. So when I started off like from scratch, and then I had
like everyone.
like everyone. And then I had a good growth where I kind of grew up to like 6K, 8K, quite quickly. And that was good. And then for a year, I was stuck there. Like for a good year, I was doing everything. I was still posting and everything as usual, but my numbers wouldn't move. At that point, I somehow just my target was to hit 10K. But I was like, there's no way I'm able to get there. And I remember taking a break. I took like a good 3 to 4 months break, and I was like, what's going on? Because I really wanted to reassess. And I think that's when I realized, like when I started my page, I started just with the intention of being able to talk about money, because nobody around me was talking about money. I have made mistakes and, all of that. So I was like, I just wanted to simply talk about money. And then over time, I kind of got lost in between, where catching up with the algorithm, trying to do this, trying to do that, it was the algorithm that was driving me. And that's when I realized, that's probably when I think that's when I stopped growing as well.
Yeah.
And then I said, you know what? I don't care about the numbers. I am going to go back and I'm going to try again. And one of the things is I'm going to stop complaining. I'm going to stop complaining about me not getting the reach, me not growing. I'm going to just look at, why did I even start this page? I started this page because I wanted to talk about money. I wanted to serve the community, and that's what I'm going to do. And then, accordingly, keep testing. I think one of the other things I learned at that point was I was very strict and, I was not ready to change and adapt. Like I kept complaining things like, oh my God, the algorithm keeps changing. When I do this works, but the next day that doesn't work. Why are my story views like this? All of this. And I'm like, can we just stop obsessing? Can we start treating it like, I think something that I do now is, that's just how the digital media is. It's basically trial and error. You have to keep testing it. It's you always testing it and seeing what's working, what's not working. If it's not working, right, lesson learned, that's not working. Let's look at what's working now. This can change like a few months down the line. So it's always that. And I think once I started doing that, it changed the game. It changed the game. I then started to like my content started to, change, and that eventually meant that I started to reach out to more people. And from there, it's been good. I still don't think, I mean, I don't know. I don't think I would call myself still a viral this one, because I started in 2020. So it's been a good 5 years now.
Yeah.
And
it takes time
it takes time. And like I said, I think I hit my first 10K in 2023, June 2022. So exactly 3 years later is when I hit 10K. And then, now I'm like nearly at 93K, and there are others who've had like such massive growth as well compared to myself. But then I'm like, it's okay. I think over time I've kind of realized that what's more important, I think, is also making sure that you do have an engaged community. I still take the time to go through my DMs, respond to each and every DM. And I still do that. I did that day one, and I still do that because community at the end of the day is like the core thing. I know again, this is quite controversial, because some people are like, oh, we've got such a large community, it's really hard to keep up with DMs. But I'm like, I don't believe that. I think at the end of the day, that's your community. Like I have grown, like even just this morning, I was on the train and I was responding DMs and somebody just messaged me and he said, I've been following you from a very, very long time. And I really look up to you for your grit and perseverance over time. I've seen how you've grown. And I was so happy that there are people who've been with me from day one until today.
Yeah.
And the fact that they message me even today that just makes me happy. And I think that, numbers are important, but at the same time, it's really important to keep in mind that at the end of the day, they're all humans, and that connection and that, community is very, very important. And one of the other things, especially because I am in the finance space, one of the things I've always stuck to is making sure that I do provide unbiased information. Like if you look at my platform, I don't really do a lot of brand partnerships. And that's really for a reason, because I know that if I say something, if I partner with a brand, I know that my community will take that, will take my word for it. So therefore, I definitely take responsibility for what I put there. Again, that's not something everyone does. And I think I definitely take personal responsibility for what I share on the platform, even if I'm endorsing another brand. So which is why I do very, very few brand, sponsorships for that reason. Only if I know that, I definitely believe in that brand. I invest through them more, I use that brand. That is when I actually associated with them. Yeah. So it's just, I think it's always, for me, it's always kind of sticking to that principles and basic principles that have been there from day one. And I always ask that myself.
I love that so much. I love that. Thank you so much for sharing that. And just as we finish up, in terms of then content, because I know so many people want to know this, like I think a test and learn approach is so important. When you stop making it about yourself and just think of Instagram as a free platform, which we are all lucky to have, because let's be honest, we didn't have it like 20 years ago to promote our businesses or our brands. I think that's really important. So do you have like a content creation process, like in terms of, because I think a lot of women just struggle with like filming and finding the time and just putting it on a back burner. So like, how do you manage that?
Yeah, so I do have, every month, at the start of the month, I do create a content strategy, like a content calendar is what I would say. So it's not like I just,
wake up.
Yeah, exactly. Wake up this morning and think, okay, what to post today? And then, come up with something. So every time sometimes I have these creativity, spurts coming in, and then I'm just noting them down. And then what I do is then put that into a content calendar for a month. So, and then I know, okay, this day, this is what we're posting. So what if I have to do that, then that means I'll have to get my script ready and I'll have to do that work beforehand. So it might just take a few weeks. And I don't generally tend to do everything in one go. So sometimes I might just script through all of these, one day. The next day I might just film those. And the next day I might just edit. And sometimes I do have like a team, someone who helps me with editing. So that means I have to make sure that's sent on time. But very recently I got someone to even start editing at this very start. It was me who was doing everything. Yeah. Like my husband would even help me with like the Canva posts and everything. So so it's been, I have to say there's a little bit of credit that goes to him as well. I try not to nag him now. But I think, people have made fun of me at the start, right? There, when I was creating all these reels, which again, I kind of feel like I won't, can't blame them, because when you start, you're not good. You're just not good. Yeah, exactly. It is, you are probably funny, but then that's how you learn. Like the fact that I always tell myself, I'm so glad I did not listen to any of them, who made fun of me, because if I had listened, I wouldn't really have what I've built today, the brand, Finance with Raji, and my startup. That's a spin-off of that. It's nothing would have happened. It's all because I was like, you know what? That's okay. Let them make fun. And one thing again I've realized time and again is only those people who have not done it will make fun of you.
The only people that will judge you
Yeah.
is the ones that are not doing anything.
Exactly.
Yeah.
So the ones who've done it, who really knows what it takes to, be in front of the camera, create a reel, edit it, post it. If they have done that once, they would never make fun of you. So I'm like, just you don't have to listen. You have to only, if someone who does it, like let's say you tell me, Raji, you're doing such a bad job, I'll take that because I'm like, okay, she's done it, so she knows. So there's definitely something that I'm doing wrong. But otherwise, I think I've kind of learned that, why are they criticizing me?
Yeah. I love that.
Yeah.
Raji, thank you so much for coming onto the podcast.
you.
This conversation has been so eye-opening and so beautiful. And thank you so much for sharing so generously. So where can everyone find you?
Well, the easiest place is obviously Instagram. My brand is called Finance with Raji. So finance with Raji, Raji. And otherwise, my website, again, www.financewithraji.com. It's as simple as that. These are two places where you can find me. Like I said, I try and respond to each and every DM because I think it's important.
Yeah.
So yes, if you have something, if you want to have a chat, just shoot a DM and I'll be in touch.
Amazing. Thank you so much.
Thank you. Thank you so much for having me. I really enjoyed it.
Thank you so much for watching this episode. Your support honestly means the world to me. And I will see you here next week, same place, same time.